Well, the benchmark has kind of moved up a little bit in the past, say, couple of weeks. And as I was kind of alluding to, uh, are we in the camp where we expect a meaningful rally into the back end of the year, or we end up meaningfully kind of outperforming? I'm not in that mindset just yet, Tanvir, at least in the aggregate sense. And the reason for that is I still feel earnings needs a reset lower. Expectations are too high. And as I mentioned, I am watching domestic liquidity closely. So those two factors in particular to think about in terms of where the market goes from here. The incremental points about, do we expect, say, for example, the RBI to perhaps cut rates when they meet next? We do expect that. I think that'll be a short term, maybe sentiment positive, perhaps. We will see kind of what happens on April 2nd with the Trump tariff announcements. We will see clearly complex and several kind of pathways there. So quite a few kind of short-term events to kind of work through. But if I zoom out, the picture is one where we're still defensive. Given the pullback we'd seen at the start of the year, on the bottom up, we are finding more opportunities to kind of think about, and we have a bunch of kind of buy ideas on a bottom up basis, but in an aggregate sense, still very defensive given where expectations are at.
What's the expectation as far as the economy slowdown is concerned and the consumption boost that is expected?
Yeah, so that's again one of the dynamics, right? So like into the fourth quarter, the fast frequency indicators is suggesting that perhaps there's more of the same, or at least there's continued momentum here into the fourth quarter for the economy. Obviously, consumption has been a big piece where we've seen a pullback and a slowdown. The tax cuts, in particular for the middle class and the kind of lower end cohorts, it's going to help, right? It's going to help. Now, does that kind of drive a big boost in spending, or does it kind of help shore up household balance sheets? We will see. But my general kind of sense on the kind of tax cuts was that it was in response to an underlying problem, right? So therefore, we will see about the longevity of the kind of the spending boost, if any. So we're still cautious in a general sense, Tanvi, in terms of the broader kind of middle class consumer spending kind of story, because we're still concerned about the lack of income growth, in particular the lower end cohorts. For that, we need jobs at scale, so on and so forth. So it's a medium-term kind of dynamic to kind of fix. Inflation has been a problem as well. Sure, we got some respite in the most recent month, but inflation had been a problem, incomes had been a problem. The tax cuts at the margin helps a little bit, but it does not really fundamentally solve the underlying problem, is at least our sense.
Right. Aditya, before we go, what about the IT sector and the problems they might face with orders, with all the onshoring drive that's going on?
So we tend not to take that view. At least our analyst is of the view that a lot of the kind of the push for the IT kind of sector with kind of the localization of talent, etc., that's already been largely done, is at least our analyst's opinion. And therefore, he's more in the camp that the revenue for that sector could still grow at about, say, 6 to 8% for large caps. And then there's margin expansion there to kind of think about as well. So we do have, whilst acknowledging that there is an element of uncertainty with regards how the kind of US economy kind of shapes up, so on and so forth. But in general, we have a more optimistic view on the IT sector compared to where the consensus view may be at. And a lot of the kind of impacts of the kind of the Trump administration, at least our analyst, he's the view that the impacts have largely been already kind of reflected in these companies. Even with AI, for example, we think of that more as a positive. So yeah, we're constructive.